What's going on, guys? Connor here with another great video. So a highly requested video has been for me to set up and kind of just go over and explain what moving averages are. So we're going to talk about what a moving average is and how you can kind of plot them on your charts using Thinkorswim, and then going from there, how you can use them to enter trades and, when would be a good time to sell your position or maybe get into a position. So to break it down very simply, all moving averages are exactly as they sound. It's a moving average. It is the average movement of a price over a given period of time. So the most common ones that you work with are simple moving averages, which will be abbreviated to SMAs. You'll hear a lot of people saying it just broke over the 50-day SMA or broke below the 200 SMA. Or you'll hear EMA or exponential moving averages. So there's really two very common types of moving averages. That's the simple moving average, SMA, and exponential moving average, which is EMA. The big difference, really, that's not so big, between the two is simple moving averages move a little bit slower than the exponential moving averages. And what I mean by that is, it's not that they really move slower, they just, the exponential moving average, it moves a little bit quicker or reacts to the price action of a stock a little bit faster than does a simple moving average. So for me personally, this video is going to go into detail about setting up and using exponential moving averages. I am more so a day trader, and I trade breakouts, as a lot of you may already know. So I personally like to use exponential moving averages. So with no further ado, let's just kind of hop into it. Right now we're looking at the stock AMD. I'm sure that many of you are familiar with this stock. I recently just swing traded this stock and I made, I think, 5% on it. So that was a good trade for me and I was very happy with that. But we're not going to talk about that. What we're going to talk about is setting up your moving averages. So like anything, we're looking at Thinkorswim. Pretty simple. We're going to go up here to Studies. This is the easiest way I find to do it. There's a few other ways to do it, but I just go to Studies. You can just click Edit Studies. From here, you'll be given, some options, and you have, these categories. All you need to do is go into your search bar, which is right up here, and you can just type in exponential, and then here it goes. It's not going to say exponential moving average. It's abbreviated to move average exponential, which is right here. Double click it. From here, you'll be given an option. I most commonly and pretty much always use the 9 exponential moving average, a 20, a 50, 100, and 200 day period moving averages. We'll go into a little bit more detail about why I picked these and just, what the numbers and the day periods kind of mean. But really, it's all fairly simple once you kind of study up on it and just do your research and do your homework. But I'm going to try and clear all that up for you guys here. So what I have here is the 9 moving average. I personally keep my 9 moving average in a blue color. So from here, when you double click on it, I'm going to go back. When you double click on it, you'll be given the option to go in and really just edit it how you want to edit, right? Most oftentimes, you're always just going to leave it pretty much the default setup that it has, which you're just going to have a straight line. It's going to be a solid line. And then from here, you can pick your different color schemes. And this goes the same for a lot of the other indicators that you'll also be able to put on your charts. Same kind of concept. You'll just double click the category and it'll allow you to come in here and edit your options. So I'm going to leave my 9 moving averages blue. That's just the color I always have it set up as. Now we have 1. We need to go in, double click, and we get another option. From here, you're going to double click this guy. You'll go in, and then from here, you're going to edit it up to, if you're doing it the same as me or whatever moving average day period you want to use, I'm going to now make this 20. That is now calculating the 20-day average moving price for this stock. I'm going to change it to orange. That's typically the color I have my 20-day moving average is orange. So I'm going to go ahead and click orange. Hit OK. And now it's going to be plotted once we hit apply. But we're not done yet. I want to go ahead and set up a few more moving averages. So I'm going to go ahead and double click. Now we're just going to go through this once again. a couple more times. Now this one is going to be my 50-day, so I just punch in 50. I come down here, my 50-day moving average is in red, so I'm going to go in here. You can also click more, and it's going to give you different color options. So I'm going to go ahead and click a deep red, hit OK. Now I'm going to go ahead, hit OK again, click on the exponential moving average once more here for the 100-day moving average. Just go up here, edit over to 100. I like my 100-day moving average in green. I hit OK. And lastly, we're going to put up our 200-day moving average. Go up here, same thing as always, 200, but bam, now we're almost done. I make mine purple. My 200-day moving average is always purple. All the colors I just picked are always the colors that I have for my moving averages. Hit OK. Now we need to hit apply. Once we hit apply and hit OK, we now have lines on our chart. So you may be asking, what do these lines mean? Okay, so the reason I like to use exponential moving averages is because I'm a day trader. A lot of my positions that I take are going to be intraday plays. I do swing trading here and there. I'm not, too fond of long-term investing. Not that I'm not. I do some long-term investing in some of my 401k accounts and Roth IRAs and whatnot. But specifically when I'm day trading, I'm using exponential moving averages. And the reason I do that, like I stated earlier, is that exponential moving averages react and plot a little bit, clearer and a little bit closer and give you a better understanding of the price direction and the price action of the, any given stock that you're looking at. That's the pretty basic, simple understanding and the easiest way I could really explain it for a lot of beginners and a lot of people trying to learn, just as I stated. So let's kind of go over it, right? So we're looking at the stock AMD. All moving averages are lines that are plotted on your chart of given moving average of the stock, and they're used as support and resistance. So as we can see here, and I'm going to zoom in just a little bit, to here should be just fine, okay? So they're not going to be the most perfect, ideal support and resistances, right? So the 9 moving average likes to act as a nice intraday setup for a quick in and out trades where we could see the stock move up, it pulls back, and then we bounce off the 9 moving average and we continue to run up. Okay, well it didn't happen here, but you see that the stock dropped down and it now bounced off the 20-day moving average, okay? So let's just say you want to get into whatever stock you're looking at. Let's use AMD because we're looking at it. The day opens up, the market opens. Let's say you got in at the bell, or for example, you didn't get in, right? You just let this thing play out, it runs up, and now you're thinking about getting in on a pullback. And a pullback is basically when the stock runs up, it pulls back to a moving average or some type of area support, and then we go up again. That's what we're looking for in pullbacks. So the stock runs up. We get a nice pullback, and you might be looking to get off, enter a position on the 9 moving average right where my cursor is, that blue line. Well, it didn't bounce off there successfully. So that's now not your entry point. Your next entry point, you could be looking to get in on the 20-day moving average. And sure enough, we get 2 red candles, and I'll zoom in a little bit more. We get 2 red candles that just kind of consolidate, and again, those are dojis, right? So those are 2 candles of indecision, right? The price action isn't quite sure which way it wants to go. We tried to sell down, we tried to go up, but we closed right in the middle with these candles. So we're in a period of consolidation right on the 20-day moving average. This could be a good indicator to jump in. On the next green candle to break above the high of the previous red would be a good entry point. You notice that we had nice support here. So if we're going to get, the stock pulls back, 2 candles of indecision, they're both sitting right on the 20-day moving average. I would play the next green candle to break above the high of the previous red candle, knowing that we just tested support on the 20-day moving average twice. Now we're getting a green candle. This could be your entry point. We just noticed we hit support 2 times. Green candle breaks up. This would be my entry point. and now we ride up. Now we break above the 9 moving average. Now the 9 moving average will be treated as support. The 9 moving average isn't always the strongest support, but it is always good to have on your chart. And as you can see, what happens? We break up above. Sure, we come back down, kind of almost test the 20-day, but we come back up, and now look what happens. This price just keeps riding up and touching the 9 moving average. That's what you want to see. Those are when stocks are in good play and we're in a strong upward momentum bullish trend, is when we're seeing these stocks run up and just touch on these moving averages and continue the 9 moving average and continue to bounce up. And as you can see right here, we sell up. We got a little extended. We got a little extended off the 9 moving average, so we sold back down, sold back down, sold back down, sold back down, touched it, support, boom. We ripped up again a little bit, and then we peaked out, and now we're going into a downtrend. The stock breaks, sells down, breaks through the 9 moving average, breaks through its next support, which is the 20, breaks through its next support just a little, which is the 50-day, and now you can see the 50-day moving average was your next real support that held up, okay? So now we're getting support. Now we're getting support on the 50-day moving average, okay? And it's showing very strong support. But as of right now, we're getting a little bit further into the, the trading day. So there's going to be less volatility. There's going to be less price action, usually. So now you can see that it tested, and we kept holding support, right? So we held support here. We came up, touched support again, and we got a hammer candle, so that could be a good entry point. Now we're running back up. Guess what? We come back down. We test that moving average once again, go up, and now we break through. Now we're really downtrending because now we even came through and broke the 100-day moving average. Okay, so now we're really downtrending. So I'm going to back out and zoom out so we can get a better picture of what happened, right? So basically, for the most part, that's what moving averages are. They're support and resistances. And I'm going to go ahead and I'm going to hop into a later time frame and just kind of touch on, how you can spot trend reversals based on moving averages, right? And here's the clear picture, right? Again, when the moving averages start to separate away from each other like they're doing here and they become wider and wider, obviously you're in an uptrend. But when you notice that your moving averages right here start getting closer and closer, and then each moving average starts to cross each other, now we're in a blatantly obvious downtrend. This would be a bad time to enter into a position knowing that our moving averages are all starting to cross over. A good time to get in, for example, is when moving averages start to cross back up. So if you were to pull a position right here, you notice the moving averages are trending back up and they're starting to cross. Those are what you call bullish signs. Now, this isn't the greatest example of it, but I'm going to go ahead and I'm going to hop into a later time frame so you can see exactly what I'm talking about. So I'm going to go ahead and I'm hopping into, let's just, I'm actually go up and I'm going to go into a different time frame, and hopefully we can just kind of pull up some good, a good view of what a moving average crossover kind of looks like. This isn't the best one, but for example, right, we're all the way up here, right? So let's say you had a position and you're all the way up in the stock and it's somewhere around $14 at this point. All of a sudden our moving averages cross. We're in a downtrend. They cross more. We're really in a downtrend. A good entry point would have been right here when you start to see your moving averages cross over, and then again once they cross here. This isn't the best example. I'm going to go ahead and I'm going to use, let's just see if we can pick out a good one like Cara Therapeutics. Let's see if Cara had a good one. Let's go to 180-day 4-hour chart. So this is kind of a good example here. And like again, I'm just picking stocks right off the top of my head. It's not like I have any of this planned out. I'm just picking stocks off the top of my head to give you guys examples. So based on a 180-day 4-hour chart, look what we have here. Okay, the stock moves up, breaks back down, and then it finds support right on the 200-day moving average. And that's another thing I want to point out is the strongest support level for moving averages is always going to be your 200-day moving average. Strongest support and resistance. When stocks are trading above the moving averages, each moving average is now treated as a support. When the stock breaks, and now the trend, flip-flops, and your moving averages cross over, and now the stock is trading below moving averages, they now act as resistance. Okay, so it's just like I said, when a stock is trading over its moving averages, the stock's moving averages become support. When it breaks below and the stock is trading below its moving averages, they become resistance. And here's a very clear picture, which is right here. We trade up, our moving averages cross over, we're now in a downtrend. Okay? Then we touch here, touch there. So as you can see, the 200-day moving average is holding a strong support. So if you were watching the stock and you notice it just sells off, we get a bounce off the 200-day, we come back, we bounce pretty much off the 200 again, bounce off the 200 again, you could say that it's probably a good idea, or it's safe to say that this is a good entry point on the stock for a long-term swing position, because if you notice, the 200-day moving average is holding up as a nice support. So getting in on that support level gives you a good chance to make some profit, because there's a high probability, as history repeats itself, that even if the stock you got in here and it comes down, there's a strong chance it's going to bounce off this support and continue upwards, and that's exactly what happens. Okay, so I will go into another video going over simple moving averages, but this one was just used for exponential moving averages. And then I'll also go into a video about the golden cross. So if you want to do swing trading, or a little bit, taking long-term positions, I'll show you how to spot golden crosses and stuff like that, so you can get a better understanding of how to trade long-term. But as many of you know, I'm just now getting my channel started, so I'm throwing all this information out, and I'm taking a lot of requests. So there's just a lot of stuff coming in right now, and I'm doing my best to get everything out there for everybody. And as many of you know, I use Thinkorswim. So if you don't use this platform, many other platforms work the exact same. Their setups may be a little bit different, and setting up the moving averages on your chart may be a little bit different, but they all mean the same thing. And if you look over here, I do have some Fibonacci retracements for the stock Kara, and I'll go into Fibonacci retracements at some point so you guys can learn how to use those. So there's just so much stuff we're going to cover, and I'm super excited to get all this information out there for you guys. And like always, if you're not already my friend on Facebook, send me a request if you would like to hop on to my live streams and watch me trade live every morning, usually Monday, Thursday, and Friday. Some days I'll flip-flop. It just depends on what my schedule looks like. So if you want to join into my live trades, you can join me on Facebook Live until I reach 10,000 subscribers on YouTube. Then I'm able to go live on YouTube. For whatever reason, they won't let anybody with less than 10,000 subscribers go live on YouTube. So that's what I'm working towards right now. So if you haven't already, send me a request to Facebook, and I'll be more than happy to accept it. And then you'll be able to hop onto my live streams for pre-market analysis and live trading. And if you haven't already, join the TechBud Solutions group on Facebook. It's a really good group to be a part of. There's just tons of information flow, and we're just always there to teach new traders and even advanced traders. We'd like you to be in there so you can help out others too, and just grow this very helpful community on everybody becoming a better and a successful trader. There's so much money to make in the market that it frustrates me when people are losing and taking bad positions, and maybe it's just lack of knowledge. But that's the idea of TechBuds. We're here to help everyone grow and just become a successful trader in this long journey of ours, okay? So like I said, please like, subscribe, and I'll come at you with another video here shortly.